Hello, everyone. Welcome back to Forex Signals TV. I'm Shane Vernier, market analyst over at ForexSignals.com. Today, we're going to talk a little bit about U.S. non-farm payrolls, NFP. And if you've traded shares, crypto, Forex, whatever, odds are that you've heard of NFP. Non-farm payrolls is the #1 employment metric in the world. It measures the labor market of the United States of America. When NFP is high, the U.S. economy theoretically is booming. When it's lower, things may not be so well. Storm clouds on the horizon. So either way, it doesn't really matter what the number is. What we care about as traders is volatility. And the #1 thing you need to remember when you're trading an event like NFP is volatility is going to be present, and you need to know what you're going to do before you do it. Now, in this video, I'm going to show you one way to trade non-farm payrolls. I'm a scalper of over 10 years. This is going to be a basic scalping strategy. It's essentially long-term support and resistance levels executed on short time frames. Sounds counterintuitive. It's anything but. So let's get over to the trading lab to see if we can spot a trade or two, and let me show you what I mean. All right, let's take a few minutes here and talk about exactly what it's going to take to scalp NFP successfully. Remember, it's a huge economic event and we have to have our game plan in place. Volatility will be at a premium. Our main goal here, if we're going to pursue profits inside of this kind of market environment, is we have to protect ourselves at all times. And hopefully with our scalping strategy, we can do exactly that. If you take a good look at the 4 tenets of scalping NFP, the first thing we're going to do is we're going to identify our support and resistance levels in advance. Secondly, we're going to have a conservative pip expectancy. We're not looking to hit a home run here. We're not looking for that 1-to-3, 1-to-4. We're looking at basic 1-to-1 risk versus reward ratios. Tight, condensed trades. We want to get in, we want to get out. Number 3, we're going to have aggressive stop losses. We're not going to dawdle. If the price goes against us, if our levels don't work, we're out. It's simple as that. We're going to cut our losses, and we're going to start looking forward to that U.S. Open, which is T-minus about an hour away. And number 4, we're looking for instant positive price action. When we put our orders down in the market, when we look at our key levels, what we want is price to hit those and go our way. If it's a buy order, we want positive price action. If it's a sell order, we want bearish price action right away. So let's get right over to the charts and show you exactly how to set one of these up. So right here we have an Aussie US dollar chart. Let's say that I'm interested in scalping this commodity pair and the commodity pair essentially as we get into NFP. The first thing I'm going to do is I'm going to identify my long-term levels. This right here is a weekly chart, and I'm going to say, okay, what's market state doing on a weekly time frame? To do this, I'm going to use Fibonacci retracements, but you can use moving averages. You can use really any sort of device that is conducive to creating support and resistance levels. First thing I'm going to look at is I'm going to say, okay, we have a general wave right here. I'm going to see my ideal entry point right here would be maybe a 62% Fibonacci retracement. I can see my price point is at 68.55. As I'm watching price right now, we're right around 69.15, so we're not quite in the ballpark of my trade, but I want to be ready. If price comes my way, I want to be ready to get long when it hits my level. So how am I going to do that? Well, I'm looking at my long-term anchor point here, and I'm saying, okay, 68.55, where should I enter this market? More than likely, we should shade our entry just a few pips to make sure that we get in. How do we do that? We enter our orders. Boom, we go right there, we create a new order. We're looking right there, boom, like 68.55. You're gonna go right here, probably 68.59, something like that. We go to our take profit. I'm only looking for probably 25 ticks here, 25 pips, something like that. It's gotta be very conservative. Now my stop loss location's fascinating right here. We're going from about 68.59. We're gonna put that stop loss about 25 pips down there, right around that 24 level. So we're looking for a 25 to 125 type of a trade, and with a 1-to-1, we just slam it on the market. So boom, our orders are placed. We are ready to go. Now, as the event unfolds, what I'm going to do is take that long-term anchor point and manage it on a short-term time frame. So I'm going to be looking at a 1-minute chart. That's one of the big misconceptions about this strategy. People say, Shane, you use these long-term anchor points, so how are you going to do this on a weekly chart? No, we're going to look at the minute-by-minute chart and see exactly where price is. Now, as you can see, as we manipulate the chart, we're looking to get long somewhere down in here. We're down in here somewhere. Price is still trading well above 69. We're looking at 68.55. So realistically, our entry point is down in this vicinity. So even though price is a long ways off the pace, remember that volatility can spark a directional move like that. And that's what we're looking for. We're looking for heavy volatility. We want to get in the market on the backs of that liquidity. We want to be filled at our entry point, and we want to see price action go in our direction. That's all that there is to it. Our orders are down resting at market. When price comes our way, we're looking to buy in. we're looking for that positive bullish price action. That's what's going to give us a winning trade. If price runs against us and knocks us out, no harm, no foul. Stop loss is down. Our leverage is right where we want it to be according to our risk capital. 1 to 3% on one of these trades. I would recommend more of a 1 to 2%, but if you see a very strong setup, 3% could be the rule. Now, this is just one way to scout the NFP. This is one way to trade it. You can swing trade it, fundamental trade it, whatever you want. But what I'm saying is those long-term support and resistance levels, those anchor points in the market, when we go to short time frames, those can cash in a hurry, in a big way. And best of all, our risk is minimal. The number one thing that you need to remember, whether you're trading NFP or anything else, is to protect yourself. In the name trading, what does trading mean? It means we're going to give a little away to get more back in return. When you do that, you have to be covered. That means have your stops down and leverage in check. In the face of an economic event, the magnitude of NFP, you have to make sure that your stops down and leverage in check. That way, if the market explodes, you're covered and you're going to live to fight another day, no matter the outcome. Now, we really appreciate you guys dropping in and checking out our videos. We had a pretty good one last time out on Bollinger Bands. We got a lot of pats on the back. We also got a lot of criticism. We almost welcome the criticism more than the pats on the back. So feel free to leave a comment below whether you like the scalping system or you don't. You want to say, Shane, you're crazy. That scalping stuff doesn't work in the live market, especially during NFP. Let us know. If you want to take the other side of my trade, be my guest. I welcome that. Remember, the markets are so diverse. There's a trillion different ways to skin a cat in the markets. If you're making money your way, that's fantastic. If not, maybe take a look at laying down some of these levels and trading NFP sort of in a scalping conservative fashion. It may help you, it may not. The choice is yours. In any case, we do appreciate your patronage, and leave us a comment below regarding any ideas you want to see in upcoming videos. It's always a pleasure to put these out. I always like to help other traders when I can, and I know I can speak for the whole team at Forex Signals, where we'd love to see you in the trading room. Any questions at all, direct them, private message, live chat, or just leave them below. We'll get back to you as soon as we can. So until next time, trade the action well, and we'll talk soon. See ya.